Let's first take the granddaddy of all, which is the dollar index, the dollar yen. And as you know, we have a major structural point in the dollar, which is the 81.12. This is the point that we have been discussing, God knows, for ages now. And it goes back, as some of you know, till 95. The 81.12 is the lowest point that the dollar has reached back in 1995, and it was here where it stopped at in the beginning, at the latter part of 2010, and we only broke through it last week, and this is where we had the intervention. And this is the week. I want you guys to take a mental picture of this, because I want to show you something that's extremely interesting. Well, at least I think it is interesting. See this? This is your dollar, and it broke down, it capitulated, and now it reversed, and it's up the 80, above the 81.21. This now to us is the beginning of a reversal. It is now an indication that we are going to get some short covering push in the dollar, because the last time it sprung above the 81.12, we had a magnificent move to the upside, or at least up to the 87 initially, and then the 87 became, the guys that are interested in price behavior, and you know what we have been discussing about structural points. You can see, if I take you here, this was the lowest point in 95. The 87 number over here becomes your structure. This is where it has failed, and right there the 87.1 became, or 87.10 becomes the structural point, and you can see now the move that has followed the 87.10 all the way up to at least the 110, and if not higher. The same thing is reoccurring right now, pretty much the same thing. This is your 81. This is where we broke, and if it gets back above the 81, or it's in any way will break above the 85, we should be looking for a big move to the upside. Also, if you look at the yen index, you can see it is the upside down. This is the upside down picture of the dollar yen. Look at the dollar yen. There is the dollar yen. Look at the yen index. It's the upside down. And therefore, that gives us an indication that both the dollar is sitting at a breakout point and the yen is sitting at the breakout point. So the bias for the dollar is to the upside, the bias into the yen is to the downside, but based on this, we can expect a lot of volatility at or around the breakout points. If I'm looking at this, my bias now for the dollar yen is to the upside. My structural point, as you see, is on the daily chart, is now the 81.10. It has closed above the 81.12, and now it is trading at 81.33. At this point in time, I want you also to see the intraday chart, because it is fascinating also what happens at or around a structural point. This is our year 8112, and you can see how many times it has tried to break above it, and then it resolved itself to the downside, only to come back above the 8112, reversed, came back inside the whole of New York session sitting at the 8112, and now it has resolved itself to the upside. This is now for us the dollar yen based on the intraday chart, the daily chart, and the weekly chart is a very strong buy signal, and we need to be buyers of the dollar now. And because now we have all the validation we need that the dollar versus the yen wants to go up. So the way we're going to be trading this, we're going to be buyers right now. And this is what we had from last week. So you can see our structural long point is the 8112. And our short point was the 8024. So now we are going to buy or find a place to buy the yen. So in this case we will buy it above the, this will be our buying point above the 81.45, and if I buy it above the 81.45, we should put our stop below. This is the long stop. We should put it below the structure point. Yes, it's about 40 pips, but with this volatility that's going on to the market, that seems to be the reasonable thing. Okay, we are only going to go short below the 81.12, and we're going to place our stop right above the 81.12, because again, if it gets above 81.12, we don't want to stay in that trade. So the way we're going to enter our plan, we are going to go long above 81.45, and our short point is 81.12. Our structure long, I'm going to come to it in a second. This now becomes my structural short point, and it is also my short stop. This means that you're not going to use precisely the same stop. You're just going to give it a little bit more room. So you may, if 81.12, make it 81.25, something like that. But that's what you are looking for. Let me see the structure long point, and then I'm going to come and answer Rupert's question. The next structure long point is the 82.87. So if it holds now and it keeps on going, I'm looking for the next structure point as the 82.87. All right. Okay, so these are the points we need to be buyers of the dollar above 81.45, and if we do, our structure long is the 82.87. If I buy it at 81.45, my stop is the 81.12. Okay, and if I'm going to go short, I'm only going to go short below 81.12, which is my structural short, and it is my short stop. Okay, now the question that Rupert is asking, should we be concerned about the intervention? Yes and no. If the dollar is above the 81.12 and it continues to creep higher, there is no fear of any intervention, because this means that the yen or the dollar is moving in the direction that the BOJ wants. It wants it to be above the 81.12 and to continue to go higher. Only if it trades below 81.12, you will go short. But what will happen is, what usually happens in intervention is that the central banks that are planning to intervene are not going to intervene the moment the price penetrates the 81.12. I mean, they're not going to wait until it comes here, and once it comes here, they're not going to start jumping in and buying and supporting it. No, this is what they will do. They will wait until, and you can see it right here. You can see the same action, the same behavior right here. This is all below the 81.12. Nothing has happened. I mean, it's just moving sideways below the structural point. Only when it is really capitulates and all the shorts like this, you see, this is all the shorts are suckered in, and they see now that the market is committed into this direction. Now they're going to intervene, and once you see buying with momentum into the opposite side, this is when you know that the Bank of Japan is coming in. But they want to make sure that everybody, all the shorts, are committed to the short side. They have positions, they have profit, and that's why they come in, so that they slingshot the market into the opposite direction, and then all the guys that are short will be scared, will lose money, and they will learn from the lesson, and they will not go short again. So you shouldn't be scared if it trades below the 81.12. You should take it short and then let it ride until you see some momentum coming in, or buying momentum coming in. Any buying momentum would be a sign, the first sign of the BOJ. All right? Okay, guys, this is the dollar.